Okay, good morning everyone. Thank you for coming. We've got 3 people in the classroom right now. How many in the physical classroom? How many online? 137, so that's a good number so far. Okay, so today what we're going to do is we're going to finish up, yes, happy early Thanksgiving to everyone too. We'll talk about that more towards the end. We're going to finish up chapter 12 today. So what we're going to be doing is we're going to do 2 homework problems, a series of questions, and then we are going to look briefly at Angie's List and Apple. So first of all, announcements. Exam 3, I've said this before, but bear with me. Exam 3 is Sunday, December 7th, starting at 8 a.m. I have 9 a.m. on the slide, but the lab does open at 8 a.m. through Tuesday, December 9th, finished by 6 p.m. The sections 3, 7, and 8 schedule with ProctorU soon. You have to do it at least 72 hours in advance. And if you submit your exam by 6 p.m. on Sunday, December 7th, you get a 10-point bonus. So Haley and I will be proctoring in the computer lab, so if you're in sections 1 or 2, I would encourage you to come to the computer lab. We are there from 8 a.m. to 6 p.m. And you can also take the exam on ProctorU. Okay, what's due this Saturday? Chapter 12 homework's due. You can do the homework today. I mean, it's not very long this week. It's 3 problems. And section 3 also has a regular quiz. Okay, there's a question that's been out on Learning Catalytics for a while. It is sale of equipment. This relates to what we did Monday. Is reported on the statement of cash flows as what? Operating activity, investing activity, or financing activity? So that's our first question. So get that answered in the next short bit. I wasn't talking at the moment right then, Anthony. You're going to tell him to call the number? Okay. Sale of equipment is reported on the statement of cash flows as what? 10 more seconds. Okay, that's investing. So investing cash flows are anything to do with long-term assets. Okay, next one. Making a loan. This is where we're loaning someone money. So we're giving them cash. They owe us. Making a loan is reported on the statement of cash flows as what? Operating, financing, operating, investing, or financing. Making a loan is reported on the statement of cash flows as what? Operating, investing, financing. 10 seconds. Okay, making a loan is considered to be investing. This is a notes receivable. When we make a loan, that's considered an investing. It's a long-term asset. All long-term assets are investing activities. Okay, and then one more question before we go on. This one, quick calculation on it. We have a company sold land for $150,000 cash. purchased equipment for $30,000 cash, and issued bonds for $100,000 cash. What's the net cash provided by investing activities? So you first of all need to determine which ones of those are investing activities, and then whether it was an inflow or an outflow. So we'll take about a minute or two to do that one. Okay. Let me see how we're doing on this one. Another 10 seconds or so on this one. Okay, what we have here then is we sold land for $150,000 cash. Selling land, that's a long-term asset, we're getting cash. So the $150,000 increases cash. Purchase equipment, equipment is a long-term asset. We purchase it, so it's $30,000 going out. And then we have issued bonds. Issuing bonds is long-term liability, so it's not an investing activity. So what we have here is the answer is $120,000, and I got that by taking the selling the land for $150,000. That got us $150,000 cash. We purchased equipment for $30,000, so we spent $30,000, and the bonds do not count because they're long-term liabilities and are a financing activity, not an investing. Okay, now we're going to do short exercise 12-7 followed by 12-8. They're connected. What we have here is we have a list of data. And this list of data is given to us in no particular order, and we're told for this exercise to prepare our operating section of the statement of cash flows. Now, on Monday, we had a template that I gave you that said, I said, this is really important, know this, and the operating section template started with net income, and the next line was adjustments to reconcile net income to cash provided by operations, and then you have a whole list of adjustments. That's what you have beside you when you tackle this. So the first thing on that operating section using the indirect method, because the indirect method is the only method we're using, the first thing on it is net income. And when we look at our statement here, when we look at the statement here, Haley, the bond isn't included because it's a long-term liability and it's an investing cash flow. When we look at the statement here, net income, we need net income at the top, but net income is given to us, and it's given to us as a question mark, so it's not given to us. So the very first thing in the operating statement of cash flows is net income, but we have a question mark, so we need to calculate it. So to calculate net income, we're going to go through the table and find everything that's part of net income. When we calculate net income, we start with sales revenue. So we find sales revenue, and I'm not identifying these in any order, they're just the order they're given in the table. So we have sales revenue, $376,000. We have cost of goods sold, $198,000. And we're looking for more expenses. We have other operating expenses of $64,000, and we have depreciation expense of $12,000. So what we've done is we've gone through the table, found everything that impacts net income. None of those other items impact net income. So anyway, so now to calculate net income, we take all of those. We take the sales revenue minus the cost of goods sold, minus other operating expenses, minus depreciation, so we get income of $102,000. So we had to calculate that by the information we're given. Okay. Now, The first line of the operating section is net income, and then we have all the adjustments to reconcile it. So again, referring to that template, we would just simply look at each item and see if it's in the table. So what I'm going to do now is I'm going to leave this screen, and I'm not going to leave the screen yet. I'm going to identify the things that go on that statement. So on that statement in the operating activity section, which is the section we're preparing, we have net income, which we just said was $102,000. So we calculated that. We also will have increase in current assets other than cash. We will have increase in current liabilities, and we have depreciation expense. So all I did was look through the table, look through the template, and see what items are in the table given to me that are in that template. So I've identified the 4 items. So next up, I'm going to go to prepare this section. And when I prepare the section, I'm using the numbers that I have identified here. So I've identified 3 numbers from the table, and I calculated the net income as we did just a little bit ago. And now I'm going to put together the operating cash flow section. So this is just a partial statement. So it's the operating cash flow section only. So I started with net income. Again, net income I calculated before on the prior slide. It's down there at the bottom. And then I'm going to do my adjustments to reconcile net income. The first adjustment is always the depreciation, depletion, or amortization adjustment. So again, I have that template. I write on my sheet. I know the first one's going to be depreciation. So I have $12,000. The increase in current assets other than cash, it's subtracted because on my template it tells me to. So I'm going to subtract that decrease in current assets, and then I'm going to add the increase in current liabilities. Again, I keep referring to that template I did. Now I want to show you, I'm going to take these items right here, the $12,000, the $63,000, and the $20,100, add them up together, and I will get the $30,900. Okay, so I've got the subtotal there. So all I'm doing is subtotaling those items to say, here's my increase. Okay, here's my adjustments. My total adjustments are the $30,900. They're negative because I have $12,000 minus $63,000 plus $20,100. Again, I'm referring to that template for the statement of cash flows that we went over on Monday. And then finally, I will come up with my net cash provided by operating activities. To do that, I take the $102,000, subtract $30,900, and I get $71,100. Now, I'm putting a double line, underline under this one just because it's the end of this exercise. It's not the end of the statement, but this exercise just said prepare the operating cash flows section of the statement of cash flows. So that $71,100 we're going to see again coming up. So that is the end of exercise 12.7. So it just wanted us to prepare the operating cash flow section. Okay, so now we go on to exercise 12.8. And it looks very similar because it's the same exercise, but now it says prepare the whole statement. So we have the operating section that we just did, and then we have an investing and a financing under that. So what we're going to do is we start the statement with exactly the solution that we just had. So we start with the $71,100. But now what we're going to do is we're going to do the investing section and then the financing. So we're just kind of continuing the next exercise. So investing activities. Investing activities are things to do with long-term assets. So long-term assets, purchase of equipment, $37,000. I make it negative because if I buy equipment, the impact on cash is to reduce cash. So whenever I'm trying to decide if this is increasing cash, or if I increase it, if I add it or subtract it, I think about the impact on cash. If I bought equipment, okay, I'm going to stop because I just read the question. I get sidetracked, where there'll be supplemental videos for this week. We're doing all the homework in class, so I don't have any need to do any supplemental videos this week. So, okay. So, cash flows from investing activities, purchase of equipment, it's an outflow because we're buying equipment, cash would be reduced. Okay, we sold land. If we sold land, we get $28,000 in, so that's an increase. And then my net cash use is minus $9,000. That's because I spent $37,000, I got $28,000 in, so my overall net was I spent $9,000 on investing activities. Again, investing activities are long-term assets. So we have the operating section we did for 12.7. We just did the investing section. The last section of the statement of cash flows is the financing section. So starting with that one, financing section is long-term liabilities and equity. So going through here, we have proceeds from issuance of common stock. We issue stock, people give us cash, so we have an increase to cash. If we paid a note payable off, we spent cash, so we have a decrease of $37,000. We have the payment of dividends. Okay, the payment of dividends is typically our last item on there. So when we pay dividends, we're paying out cash. And finally, the purchase of treasury stock. I guess payment of dividends is near the end. Okay, purchase of treasury stock. We buy our own stock back. We spend cash to get the stock in. And then our net cash used for financing activities is $27,400. Okay, now on this one, we used cash for financing of $27,400. That's the subtotal of the prior four numbers. And now on the next page, what I'm going to do is I'm going to put it all together. So we're going to see what we just did. So here's the big statement. So up at the top, the $71,100, you have that in your notes. That's what we did in exercise 12.7. So that's at the top. The next section down, cash flows from investing activities, that would be when we did the investing activities, we used $9,000 net. Cash flows from financing activities, that would be the $27,400 we just did. And then finally, at the bottom, we're going to take, to get to the bottom, we take the net cash provided by operating activities. I just circled it on here. So the $71,100. And then I subtract the $9,000 for investing activities, subtract the $27,400, and I get a net increase in cash of $34,700. Okay, so it's those three numbers added together, subtracted as the case may be. Okay, so that brings us to the end of short exercise 12-8. We're going to do a few questions now. Oh, I guess not. We'll do Angie's List first. Yes, if investing or financing activities were positive, you add them. You subtract anything that's negative, you add anything that's positive. Okay, so now Angie's List. So this is the big statement. If you're interested in seeing the particulars, you can Google Angie's List annual report and it'll pop right up and you go to the Statement of Cash Flows page. This is their Statement of Cash Flows for 2011, 2012, and 2013. This is their most recent annual report because they had a year end of December 31st, 2013. So in there, first of all, Angie's List, I think it's been in existence several years now, maybe 19 years, but I'm not sure on that. But they've never had a profit. They have lost money since they opened. And so when we start looking at their statement of cash flows, what I'm going to be doing is I'm going to blow up certain sections of this so we can see it. So the columns are, the far right column is the oldest, it's 2011, the middle one's 2012, and the leftmost one is 2013. Okay, so the first one up here is I'm taking their operating cash flows. In 2011, they lost $33 million cash-wise. In 2012, they used cash for operating activities, used up $33 million. And then in 2013, their operating cash flows, they actually had almost $9 million from operating cash. So you think, okay, well, at least they're going in the right direction. But if you look at what caused that, at the very top line, it's covered up by the logo, but the net income's at the top. So in 2011, they lost $49 million. That was their net income loss. They had a net loss in 2012 of $52 million. 2013, they only lost about $33 million. But how they ended up with a positive cash flow, if you go down through the list, the big thing is deferred advertising revenue. You know what that is. Deferred advertising revenue is unearned revenue. That is revenue that they've collected in advance, and here there's an adjustment for it. So they've got $17 million from that, and that's what's keeping them positive on the operating cash flows. It's the first year they've had a positive operating cash flows. So it still doesn't give you warm, fuzzy feelings about their operations. But moving down now to the investing activities. So investing activities, when I look at investing, remember investing activities are long-term assets. And we look, and every year they have negative cash flows for investing. And with a company that's growing, you would expect to see that. Negative investing cash flow means they're reinvesting in the business. If you see positive cash flow from investing, that means they're selling off equipment or stores or divisions. Something's going on. So a negative cash flow from investing is normal with a growing company. Okay, but then when you look at what they've done, what Angie's List has done, is the big part of that investing activity is purchasing short-term investments. So I still wouldn't get real excited thinking they're reinvesting in their business. They're buying short-term investments, presumably so they can use that money later to pay obligations. But they're using cash for investment. And then down to financing. We look at financing. They have positive cash flow from financing every year. They're getting money from debt and equity to stay alive, which makes sense. Back in 2011, $116 million. In 2012, $9.4 million. Last year, $5 million. So it looks like maybe their financing through debt and equity is starting to dry up. They're certainly bringing in a lot less cash from financing, and investors might be worried because this business has never turned a profit. So you see that, and then, yeah. Okay, and then that's kind of the end of what I wanted to show on Angie's List. Angie's List, very tentative. You look at their statement of cash flows, and they don't look like a healthy, thriving business. And the analysts are split on them, so it's interesting. So just follow Angie's List, watch it. But you can see for their statement of cash flows there's some issues. So now let's look at Apple. Okay, so this is an opposite kind of thing. When we look at Apple's statement, now first of all, Apple has a year-end that's as of the last week of September or something like that. So their year-end changes dates from year to year. It's based on a 52-week year. So we have September 29, 2012, September 28, 2013, and September 27, 2014. So this just ended. Their financial year, fiscal year, just ended at the end of September. And we look at their operating cash flows, and we see in 2012 they had operating cash flows of $50 million, 2013, $54 million, and 2014, almost $60 million. That's positive operating cash flows. Apple is making money hand over fist, and you see it coming through in their operating cash flows. So then moving down to cash used in investing activities. Apple is reinvesting lots of the money back into it. In 2012, it reinvested $48 million. 2013, $33 million, and then $22 million. So you see that they're using the cash, reinvesting it, or putting it in investments, and that's very normal. Yeah. And then cash used in financing activities. If we look at this, and this is in millions, yeah. It does say millions at the top, right? Yeah, okay. Yeah. Okay, so cash used in financing. We look and we see what's going on with financing, and Apple's made the news recently for this. They have been purchasing back millions of their own stock. They're doing a lot of stock buybacks. They've also increased their dividends. They actually have a lawsuit being filed. They have a lawsuit being filed by a major investor who wants them to pay even more dividends and buy back more stock. So Apple's just sitting on tons of cash, and you see they're getting all this cash from operations. They're using it in investing activities and financing activities. And then down at the bottom, when we look at their cash, do I have that circled? Nope. Okay. At the bottom, the cash went from 10.7 in 2012 to 14.2 in 2013 to 13.8 in 2014. So cash is building up even though they keep spending it on this other things. So Apple is way different than Angie's List. So when you pull out a statement of cash flows, it's one of the most interesting ones to look at. Remember that the operating cash flows is the single biggest factor you want to look at. With a healthy company, you want to see positive operating cash flows in each year. Okay, so let's do a couple questions. So leaving that, let's do a couple review here. The statement of cash flows will not report what? So go ahead and give this an answer. Try it. Okay, the statement of cash flows will not report what? Okay. About 10 more seconds on this one. The statement of cash flows will not report what? It's not going to report the number of checks not written at the end of the period. That's a nonsense item. How do I know the checks I didn't write? So, but it will report how cash was used in the current period. It will report changes in the cash balance, and it will report the sources of cash in the current period. Okay, let's do another one. Okay, the statement of cash flows classifies cash receipts and payments as operating, non-operating, and financial activities. Everyone should get this right. Is that true or false? Is it broken down into operating, non-operating, and financial? About 10 seconds left on this one. The statement of cash flows classifies cash receipts and payments as operating, non-operating, and financial activities. True or false? That is false. Okay, we just went through operating, investing, financing. Those are your activities. That is how the statement of cash flows is classified, by operating, investing, and financing. Okay, another one. Operating income is typically equal to cash flow from operating activities. True or false? Okay, operating income is typically equal to cash flow from operating activities. Another 10 seconds. Okay, that is false. Operating income is like net income. We start the operating activity section with net income, and then we have a whole series of items to reconcile, adjustments to reconcile that operating income or net income to the cash provided by operations. So we're reconciling from the accrual income to the cash, and they are not the same. Okay, another one. How do you earn the 10-point bonus on the final exam? Okay, about 10 more seconds on this one. You have to submit the exam by Sunday at 6 p.m. on December 7th. Okay, so what we've done here is we've come to the end of Chapter 12, so we're actually at the end of the material. A couple announcements. First of all, we have Chapter 12 homework due this weekend, Chapter 12 quiz if you're in Section 3. Next week, we're doing course evaluations. If you're in Sections 1 or 2, I really need you to come to the physical class on Monday. If you're in Section 7, 8, or 3, you do the course evaluations online. I asked the university if all of my students could do the course evaluations online, and they will not permit it because it's against the rules. So, because only certain classes can have evaluations online. So if you're in Sections 1 and 2, I value your input. Your chance to give feedback is Monday. We're going to do course evaluations. So if you're in Sections 1 and 2, please come to class if you possibly can. If you're in Section 7 or 8, if you're in class, fill out the evaluations online. Don't fill out the paper one. So there is that. So Monday we have course evaluations coming. Also, so we are at the end of class now. Any questions? Quiet crickets. Okay. I hope you have a really happy Thanksgiving, and I will see you next week for the end of the last week of class.